Hey, this is Matt from InvestiQuant. Today is Friday, February 19th, 2021, and today is options expiration day. We looked at a study this morning based upon gapping up on options expiration day, which had favored the downside for the session, and we're seeing that play out this afternoon. We're trading down near the lows of the session as we are approaching the closing period of the day. And what I want to do this afternoon is look at that same study, but evolve it into the afternoon, adding this price action that we've seen where we're trading lower than where we opened at as we approach the end of the session. So let me hop into Discover and we will set this up and take a look at the results. We're going to be using all four instruments here, and we're going to use an intraday time-based entry. And I'm a little bit late on getting this out, so I'm going to go ahead and push this out to a 3:15 p.m. entry time. That's based upon Eastern time, where it's going to be getting long. So this is going to be looking at the last 60 minutes of trading. The exit is set till the end of the session. Next, I'm going to go into opening filters, and I'm going to say that we gapped up this morning. That is true. We know that is true. Then I'm going to go into the post-open filters, and I'm going to say we are trading below the opening print as of the time of the entry, which I've got set to 3:15 p.m. Eastern time. So this means we're trading below the open at 3:15. All right, next I'm going to put it into a similar market environment, which is above a 10 and above a 200-day simple moving average. And lastly, I'm going to go into the market events section, click on options expiration day from the active today section, notating that it is options expiration day, and now click view results. And here we go. These are the results based upon going long at 3:15 p.m. Eastern time on options expiration day, exiting at the close 4:15 p.m. Eastern time. So just 1 hour worth of trading here. And this is based upon gapping up on that OPEX day in a bullish market environment. And at 3:15, you are trading below the opening print. So this pattern has 48 samples in the S&P dating back to 2003. It's got 51 in the NASDAQ, the Dow 45, the Russell 36. And if we look at the win rates on these, they are a little mixed. So the ES, which is the S&P 500 futures contract, is dead even, 50-50. On the NASDAQ, it's quite a bit stronger. It's coming in at 65% of these have ended up closing higher than that 3:15 p.m. Price. Now on the Dow and the Russell, they are both a little bit weaker, 40 and 42% respectively. So these numbers are quite a bit different than what we looked at this morning. You know, when we looked at this pattern off of the open, they were all quite weak, with the NASDAQ being the weakest, whereas looking later in the day, the NASDAQ is the strongest one that we're seeing here. The Dow and the Russell have similar win rates to what they had early on in the day, and then the S&P, which was weak off the open, has now become more neutral. So this pattern showed weakness off the open, but as you get closer to the end of the session, if you're trading below the open like we currently are, the edges have played out mostly for the move to the downside, which means it may be time to tighten stops if you're short, perhaps take profits, but perhaps the move has mostly taken place at this point in the day. So hopefully you found this helpful. Good luck, and we will see you next time.